Good evening, everyone.
Good evening.
Yeah, thanks for joining this webinar, and it's really good
Good
that you have
evening.
joined our webinar, and we really appreciate your time and your effort and your appreciation for this webinar. Thank you. So I'll just wait for 1 more minute or 1 or 2 minute max, so that other people are also joining. So I'll just give 1 or 2 minute opportunity for them to join, and then we immediately start our webinar. Hello. Yeah, can you all see my screen?
Yes, sir.
Okay, thank you. So today's topic is very important, and you can say a very basic fundamental topic of production order accounting. So I believe the participants who are here are more or less using SAP system and SAP costing system, and they are like familiar with the SAP system or SAP costing system. So if you are all familiar with SAP and SAP costing system, not maybe in very great detail, but if you are familiar with the terms and everything, can you quickly put in the chat box maybe yes or something, so that I can understand, yes, all the participants are familiar, and how I have to approach for my discussion. If you are all familiar, if anyone is not familiar with SAP, they can also write that no, so that I can take their things accordingly. Can you just quickly type in the chat box? Raghav, yes. not familiar with production accounting. Very good. So today that's what we are here to discuss. Nikhil, yes. Quickly so that I can get Kaushik, Nikhil, Adil, Dhairya. Yeah, all are mostly, yes, all are familiar. So that give me a good idea how I can take up my discussion. Thank you. Thank you, everyone. Yeah. So let's start this. So first of all, we need to understand what is production order accounting. So production order accounting or the process order is basically a bucket where we collect certain items, like for example, the consumption of material. Okay. In this particular slide, if you see, I have taken 1000 as my actual input cost and conversion cost, let's say 400 rupees. Okay. And my target cost of production, which I'm planning to take the output for from my production order is, let's say 1300, and the difference is 100. So this is what the gist or the kind of a final outcome of the production order accounting. So how we are booking this input consumption, how we are booking this conversion cost, how we are taking this target cost, and how the region, how to analyze this variance. This is some things we are going to be in detailed discussion in next few slides. So this is what the production order accounting. Production order accounting can give you the health of your production process, the health of your variances, and the health of your costing system. So these three very key aspects are basically given by the production order accounting. And this is the core of the costing module. Why it is important for a manufacturing company? So this is also one of the most common question which generally come to mind for all the costing person, all the manufacturing person, that why production order accounting is such a important. And many of time production order accounting people take lightly and do not pay much of attention. So let us understand why it is so important. First, to track the consumption of input material, yes. Then to absorb the actual cost of conversion. Then to compute the actual cost of goods manufactured. Okay. Generate the quantity of final product, generate the byproduct or the scrap, variance identification in terms of the price, usage, quantity, etc. Okay. Actual COGM, what we call, and normally actual COGM is something we have to get from the system, which is the outcome of this production order accounting. Okay. And the work in progress information also comes from this production order accounting. On top of it, I'll just tell you, this is also one of the key deliverable of the production accounting to reconcile your COGS in COPA and in FI. So this is something many of us are not knowing, how the production accounting can help us in reconciling my COGS of COPA and FI. So this is also one of the key feature, or you can say key deliverable of the production accounting. So these are the 9 points where production accounting add lot of value to the costing process, to the total working of SAP system. Is it clear to all of us? Any question from anyone?
No, sir.
Okay.
In short, can you tell us what is the difference between COPA and FI module?
COPA is basically one of the submodule of costing called controlling and profitability analysis. And FI is basically your financial module where you track the value by GL account, by profit center and all.
Okay, got it. Thanks.
Yeah. Now let us take the scenario, business scenario of the production order accounting. Suppose if I want to track the cost of production by batch or by order, then in many of the manufacturing company where order is relevant for my cost control or monitoring. Okay. in that scenario, my production order accounting is very, very important, and I should go by production order accounting only. So this is one scenario. So below in the few of the bullet points, the purpose of this particular bullet points is in which cases or in which business scenario production order accounting is relevant. So one, manufacturing process where we want to control and track the cost by each order or by each batch. There the production order accounting is very, very relevant. Second, in case of a joint products or co-products, this production order accounting is very, very important. So now let me give you an example of joint product and co-product. So very common example which we all consume in our day-to-day life, like petrol, diesel. Okay. So these are the joint products which come from the petroleum products. So these joint products, when we do the manufacturing of these joint products, how come these joint product costing get distributed to the different joint products? How the production order accounting work? So this is something we need to be very, very clear, and there we need production order accounting only. Okay. Then third, where we have a typical make to order scenario, means when the customer order comes and then only we do the production for meeting the customer order. There also this production order accounting is very important, because there whatever the actual cost is required or actual consumption is required to manufacture that particular requirement of the customer is getting booked in the production order, and then in turn that differences or anything will transfer to the sales order for the purpose of profitability at the sales order level. And if it is a true make to order scenario, then the target cost also come from the sales order rather than coming from the material cost or the product code. So these are some of the typical scenario of the production order accounting. I just give a pause for 30 seconds. If anyone has any questions on the 3 bullet points, please feel free to ask and let your knowledge clear. Please take this as a kind of a conversation, one-to-one kind of things. Do not consider this as a one-way discussion. If you have any point of clarity, please feel free to ask.
Understood.
Okay. Now coming to business scenario number 2. Okay, this is a kind of a unique process where we have used this production order accounting. So let me give you this example. Suppose there is a repetitive manufacturing process. So normally repetitive manufacturing means in a continuous process that production is happening. For example, let's say in a kind of a automobile industry, or maybe in a kind of a, let's say, steel industry for steel making, or let's say in the steel industry there is a process called furnace, blast furnace. So those are the typical example of repetitive manufacturing, where the production is happening on a regular basis without any stoppage, because if the machine is getting stopped, then there is a huge overhead is required to restart that machine. So in such scenario, we generally go for repetitive manufacturing, but normally what happens, the production team wants production order only, because they want to track their entire planning and everything by production order. So for that, normally costing happens on a monthly basis, because we cannot track the cost on a batch by batch, because there is no batch involved in that. There is a continuous production, no batch. So in that case, we can follow the approach that let PP person follow the production order, but the costing person will follow the monthly costing, that is called product cost collector. So this type of scenario also applicable and available in SAP system, where PP will follow the production order and costing will follow the monthly process cost collector, product cost collector. So this is one of the typical scenario. We can utilize this kind of scenario in many of the manufacturing industry which are of repetitive nature. So this is also one of the like a good example of production order accounting. So in this case, product cost collector is my cost object, not the production order is your cost object. Is this point clear to all of us? If it is clear, then you can just either type in the chat box or you can say, yes, that's okay for me. Fine. Then let us understand what are the common gaps in this area. So whenever we go for production order accounting, we found that there are a lot of gaps in this accounting process. So first of all, the gaps is input and output. So this is the most important and most common gap. Input and output are not getting reconciled with the quantity. If you put input of 100 and getting output of, let's say, 50 or 60, if there is a yield of 20%, then definitely you should get 80%, 80 quantity output, and rather you are getting 60 quantity of output. Then suddenly whether your yield has dropped or some other thing has happened. So all these analysis normally we are not doing, and we are relying on the sometimes we follow the manual route, or sometimes we say that whatever is coming in SAP it is okay. So those kind of things are form a gap over a period of time, and we cannot reconcile our material balancing and something like that. And in many places we have found that this type of, if suppose the raw material is not available in the SAP but practically it is available, then when we do the consumption, the raw material cost or quantity is getting shifted in the backlog table. In SAP, we call this as COGI. So there it is getting stored, all the backlogs. And that backlogs, if it is not cleared on a timely basis, then you can feel that your consumption postings are affected because of that. It may be wrong also. So this is the common gap, first gap, very important gap. Next, input you have posted in period 1 and output you have posted in period 2. If it is a WIP scenario, then still it is okay, because the gestation period of the order is, let's say, 45 days. So you have done the consumption in period 1 and you have done the GRN in period 2. If the gestation period is not there, if let's say 1 day, 2 day, still if you are not following the concept of same period accounting, then also there will be a problem in your production order accounting. Then we generally do not follow the concept of regular monitoring of our production orders. Just by regular monitoring the production order, a lot of problems can be sorted out, like the difference in the production order, the consumption in the production order. If these small things, if we monitor on a daily basis, then the reconciliation between the COGM versus COGS, that is cost of goods manufactured versus cost of goods sold, will be very easy. And in SAP, let me tell you, this is one of the main pain point of any manufacturing company to reconcile their COGM versus COGS, because this is what the change in stock into picture. In normal finance, we call change in stock, but in SAP, the difference between COGM, COGS is nothing but change in stock, which we will see in the next few slides. Then the fourth point related to order is not getting closed, and over a period of time, lot of orders are remain open, and it will increase my closing time and risk of postings incorrectly. And this is also one of the important validation we normally apply wherever we go for a consulting. But many places may, if you find the production orders are not validated with the standard cost of the output material, if the standard cost is there or not there, production order is getting created, GRN is happening. If the standard cost is not there, and if you are allowing the system to post the GRN, then the value of GRN can be wrong because it is not tightly linked with your standard cost. So these are some common gaps. There may be a lot of common gaps, lot of gaps, but what are the very common in many of the places we have highlighted here. Okay. Yeah. Then the next point is related to month end closing. So these are the blocks which is very, very important as a part of month end closing for the production order accounting. For example, settlement of the plant maintenance order is one process. Then your actual price calculation, setting the production order as a TECO, revaluation of your actual activity price, overhead calculation, preliminary settlement of co-products in case of a joint product scenario, WIP calculation, variance calculation, and settlement of the order. So if we are following these 9 steps rigorously and carefully, then the result of the production order accounting will be very, very good. And the outcome we can expect from that is really good because you can answer most of the questions from your management and from your CFO desk on these terms if we follow all the 9 blocks seriously. Any questions so far?
No.
Now coming to the accounting fundamentals on the production order accounting. So as of now, we have covered the gaps, the requirement, the process, the impact, etc. But when we discuss about the production order accounting as a topic, the accounting entries are most important to understand and to take a note of it. Okay. So when we create the production order, no accounting, very clear, because there is no books of accounts impacted because of just creating the production order. Then when we do the goods issue, consumption account debit to inventory account, and here your consumption account is getting booked in the production order, being the cost object as production order. Activity confirmation or overhead cost posting, secondary GL debit to secondary GL credit. In HANA, this secondary GL to secondary GL is also part of your financial document posting. But in ECC, this is not part of your FI document posting. But in HANA, yes, it is considered to be a FI document because all the secondary GL in HANA is considered as a regular GL. Now, when you do the goods receipt, the accounting entry is FG inventory account debit to COGM account. So here the COGM is getting posted in your production order. So on the top, goods issue mein consumption is posted, conversion cost is posted as debit in the production order, and COGM is posted as credit in the production order. So this is how the total amount is getting posted as a part of your regular month activity from period day 1 to day 30. This is the first 3 activities related to day 1 to day 30. The activity after the goods receipt, whatever we have listed, and the accounting entries are part of the month-end closing activities, wherein the first activity is related to the settlement of the co-product orders. So here also there is no special accounting entry will be passed. Here the prerequisite is, it is basically a prerequisite step for your settlement of your orders, which are relevant for co-products. Then WIP posting entries WIP inventory to P&L. And once the WIP is complete or the order is closed or delivered fully, then the entry will be reversed. And these entries normally passed at the time of settlement of your order, not at the time of WIP calculation. And then variance calculation and then settlement. So under the settlement, the entry is production variance account will be debited and COGM will be credited. And at the same time, the below entry, what you are seeing here, the split of your variance, this split of variance will be passed only in HANA system, and that too, we need to do some activation of your variance splitting. And once we do that, then this entry you can see in the system, the below part of this entry, this part. It is just a reversal of the production variance account and posting the split into different GL accounts. So this is what the total production under accounting. We can take a glimpse of this total accounting in one slide. This is the whole crux of this entire accounting process of the production order. Is it clear first of all? All the accounting entries I have written in a very, very simple way so that it can be relatable. Okay. Now the benefits. So these are the some benefits you can see. The COGM we can get at a order level, shop floor level, plant level. Manual adjustment entries can be avoided if you follow the correct production order accounting. Variance reporting can be highly effective if you do the proper settlement. And as I mentioned, the change in stock. So if you take this example here, my opening is 100, production is 120, sales is 170, closing stock is 50. So whenever we calculate the change in stock, we calculate by dividing the opening stock and closing stock. That is 100 minus 50 is my change in stock. But as I told you, if you calculate the difference between your COGM versus COGS, the change in stock will also be the same, that is 50. So here also, if we follow the correct production accounting, means the COGM values are correct, then it helps us to calculate the correct change in stock in a right way. So this is what the example I was about to tell you. Is this point clear to all of us? The last example, because this is one of the very, very important point. Many of the people doesn't appreciate whether the difference of COGM and COGS is called change in stock.
Can you please repeat the same?
Yeah. So if you see this example, opening stock is 100, production is 120, sales is 170, and closing stock is 50, because 100 plus 120 is 220, 220 minus 170 is 50. Okay. So this is what the simple example. Now in this example, if I ask you what is your change in stock, obviously the change in stock simple in a layman way is opening minus closing is my change in stock, that is 50 quantity. Opening was 100 and closing is 50. So change in stock is 50. But the same change in stock you can calculate by taking a difference between your COGM versus COGS. Because in SAP, your opening stock, closing stock is lying in a different period, because in this way, like opening stock and closing stock. But in the current GL accounts, your production and sales, that is COGS, are lying so in a same month. Just if you make a difference of your COGM and COGS, you can easily track your change in stock. And this is one of the most important information for your P&L.
Fine.
Now, we just want to show you a simple demo by logging into our system and a scenario of your production order accounting, whatever we just demonstrated there in the slides. Small example we just like to highlight to you. Yeah, my colleague will share the screen now. I'm coming out of this screen sharing mode. Okay, now here we'll go and check one production order. Can you go to one production order where we have done all the GRN, GI, everything? So the transaction code is CO03 and we go to one production order and you can see all the details in this. So on the status, you see the released DLV is delivered fully, the quantity, okay. And in the goods received tab, you can see you if once you have delivered that, then delivery completed tab is there, okay. In the control tab, if you go, you will find all the parameters required for your costing part. So everything is written here, okay. Now go to general tab. Now from this order, we can track how the documented goods movement have been shown. So let's go to, and there is a field called documented goods movement. If you just click here, maybe filter somewhere, remove the filters. Just can you check other order if there is no movement in that order? Go to documented goods movement. Go to cost analysis. Yeah, so the documented goods movement maybe because of some filter is not coming. So this is what the documents have been posted for this particular order. Okay, so you can see the kind of material codes are issued and quantity, value, all these things are coming here. And if you see the actual cost, this is how the actual cost is coming here. The goods received, the goods issue, the confirmations like activity cost and the difference. So what is the difference coming here? Actual cost difference is 417.40. So this is what the actual cost difference, that is 417.40. So this way we can understand the production order, how much is my consumption, how much is my activity cost or conversion cost, and how much is my target cost of the production, and what is my difference. So this is how we can understand the production order accounting. And if we want to understand the variances in more detail, let's say here, if I want to know what is my variance of 417 and what is the reason for that. So we can run the transaction code called KKS2. Yeah, take that same order number paper and run. Yeah. So out of that 417, if I want to know how much is my which type of variance, just click their cost element. Yeah, and change that variance categories. Change the layout to variance categories. Layout. Select the layout. Variance categories. Yeah, come down. Yeah, so this is how it is. So the price variance is 10 and quantity variance is 360 and the output price variance is 46. So something like that. So if you want to know the detail of the price variance, for which material the price variance is coming and why the price variance is high, all these things, you can do this analysis here. So this is one of the very good concept of the production order accounting, and you can get lot of input out of this. So for example, in that line item, you can see 50.50 is the quantity variance. So you can very well analyze the reason for that. Okay. So if you want to get into more detail, you just click on the variance, select that particular line and click the variance button. Click on the variance button. Yeah, you can get the detail of that particular variance, how it is calculated. What is my control cost? What is my target cost? What is my this, that? Everything will be listed here in detail for each of the line item. Okay, all these are standard, huh? No development, no customizations. Back. So you can always try in your own system if you are using costing and production order accounting. Can you show one joint production order, Vaibhav? Can you show one order of your joint products? No, CO03. And so one first you show the standard cost of a particular joint product. Yeah. So CK13 is the transaction code to run the display the standard cost. So let's say this is a joint product we have created. Okay. Under that you can see the input is crude oil. The joint products are diesel and LPG and furnace oil. And there is a small amount of some small product. We call it as a byproduct. Okay. So this is how the joint product costing is being done. And here the ratio has been given under the main product, and based on that ratio, the cost is getting allocated between the joint products. You can see the crude oil cost is 125 and the joint products is 66,429 versus 49,821 and 23 something and all. So this is how the costing is being done for the joint products. Now, let me also show you one of the production order for the joint products. Can you go to that production order? Yeah, and go to the cost analysis. Yeah, so this is how the joint product crude oil and byproduct credit is there, and you can see that in the goods receipt you can see all the 4 joint products together. In the previous example you can see only one product, but here in this scenario you can see all the 4 products are considered as a joint products and part of the goods receipt tab. Okay. Any questions on this particular point? Actual cost is 0 in production order Y of petrol. Yeah. Crude oil. Why, Baba? Yeah. So in this scenario, maybe the consumption posting is not completely done, and that is the reason this actual cost is not coming. So this is also we want to highlight in the production order what we need to check and verify. So if you see in this particular order, the crude oil consumption has not been done. Okay, so that's why the variance is so high. You can see the variance is 30 something, 30 lakhs something. Then automatically it should raise to our notice that why the variance is so high. It means the consumption is not posted. So as I told you, there is a gap in the system. This is also a result of that gap. Without input, I am getting the output. Practically, it is not possible, but because there is no lock in the system, either you follow the backflushing or you follow the concept of some validation that without input, output cannot happen. Normally, this type of locks are not there. So this kind of things are very high. I agree with you, Mr. Samir. So this is basically one of the scenario which I just wanted to highlight to your notice. And actually, this is not intentional that we skip this goods issue posting, but it is just like that. So came to our notice for discussion. Any questions on this? Samir, which point you want me to repeat again? Can you tell me? You have written one question or one statement to repeat something. Okay. So I think you joined slightly late. So PPT slides are there. Okay, so no problem. So those things we can discuss maybe separately on that. Okay. Any other questions from anyone? Nikhil, you have raised a question regarding FI integration with CO. what is that exactly you need in that FI integration with CO, because this particular point is a very, very subjective and very long point to discuss. So what exactly you are looking for from the FI integration with CO? Any specific doubt or any specific point, if I can help you to clear your doubt? Nikhil, if you are there in this. Okay, maybe not. So fine. Okay, do you have any doubt, Nikhil? Any questions you want to ask from me? One very good report. In the meantime, anyone is asking question. Vaibhav, can you open that report? That report we can type in the chat. I'll just type in the chat. This is a good report. You can please try in your own system. This is a T code I have pasted in the chat box. You can try in your own system. Yeah. So this is just a layout we have set in this. Okay. So here you can get the actual output quantity, variance, total actual cost, total actual quantity, and the different type of variances are coming here. Okay. Nikhil, I am coming to your question, internal reporting cost center and profit center. Fine, I'll come to that question. So this is the report which is very, very important for the production order accounting. And this report can help you to know which orders are not settled, which orders are settled, which orders has more cost, which is the output, how much is the input. Everything you can come from this report. Just scroll it. Right now. Yeah. All the variances plus the details of the total cost posted. Okay. So fixed cost is actual fixed cost is your cost of your activity, and this all that things are there. Come back. So Nikhil, let me answer your question now. Let me see what you have asked for. Okay. Internal reporting, cost center, profit center. See, cost centers are something which is very, very basic part, kind of a department or kind of a production shop floor, where the cost centers we need to create so that we can capture the cost at the cost center, and each and every cost center is connected to a profit center. So whenever you post any entry in the cost center, automatically the profit center is updated in the accounting document or vice versa. So this is internal postings happen in the profit center through the cost center. Because cost center master data has the profit center into it. Is your question answered, Nikhil, or you need any more clarification on that? Okay. Now let me just share my screen again. Once the system demo is over, so now the way forward is you can check your costing system and understand whether you are getting that report, or if you are also struggling with those type of gaps. If you are able to get that kind of understanding, please get that. And if you need our support in that, we can give you that process to review your production order accounting. Okay. And we can identify those gaps, and you can get those gaps fixed as per your own convenience. Okay. And then if you need our support in that, you can very well type your name, your company name, and your contact number so that our backend team will get in touch with you and set up a meeting with you to review your production order accounting system and identification of the gaps so that you can take necessary action on those. Okay. And this is how we can extend our help and extend our expertise with you so that you can get benefited out of this whole webinar and whole exercise for that. So anyone who are interested to get this gap identified from your system can very well utilize our this demo services, and that is free of cost, and you can always get in touch with us. So this is something we are offering to all who are there in this webinar. Very easily they can type their name, company name and contact number so that my backend team can get in touch with them. So that's it from my side, and I always be available for all of you to help and to support wherever you want any professional help on that. First,
Sir, thanks for your explanation about the uh, features which are available. If I want to attend some full-fledged knowledge kind of thing, even if I can pay for it, also it is okay. I want to learn SAP module fully related to costing and financial accounting also. Is there any other classes or something you are taking?
yes, we are taking those also, and good that you asked for. There is a website. I'll just share that, and we have completed a lot of batches also for that. So I'll share my screen. So I'll just show you that. So the website name is costingwala.org. So under that website, we have different courses here. Like for example, SAP Basic Costing course, graduation course, and post-graduation course. So depending on the level, you can select your course and you can register here. Now, this is the right time. You can, if you register in this basic course, because now we are about to start a new batch for the basic course, because this batch generally starts and end from 1 to 1. So this is a good time, because from first week of December, we are launching a new batch for the basic course, and these are the course content of the basic course, and these are the detail. All the courses are online, and these are the timings, and these are the practice session. You will get full SAP access and SAP system access for the practice and everything. So the registration is very simple. You can register just by clicking here. So very simple option, and you can get all the details once you register in this course. Is that okay? Raghav?
Got it, sir. Thanks a lot.
Yeah. Let me see any more questions. Uh, yeah. Samir, I'm coming to the first slide. Give me 1 second. Yeah. So let me know which slide you want me to repeat. Samir, can you just unmute yourself and tell me which slide you want to understand more? Samir, the first slide means the second slide or the very first slide? Very first slide is like something only what is production order accounting. Correct. Second slide. I'm coming to that. Okay. Is this the slide you are referring? What is your doubt in that, Samir? Samir, can you raise your questions either in the chat box or by unmute yourself? You want me to explain that second slide again? Okay. This second slide is basically a depiction of your consumption of input material, because in the production order, what is going in and what is going out, it shows this. So this is how the in and out in the production order, and the balance is called variance or the difference. So this is the second slide, and I'm not sure whether if you are looking for this slide. So this is the third slide in the PowerPoint presentation, but from the content side, it is the second slide. So why it is important for manufacturing company to have a production order accounting and good production order accounting? These are the reason for that. If you want to know any particular region, please identify and let me know which region you want to understand. Samir, can you tell me which particular bullet point you want to understand more, so that I can focus on that bullet point rather than explaining all the bullet points again? Okay. Okay. Okay, Samir. Thank you. Thank you for your patience, and thank you for your doubts. One by one, please. Okay. So this is the second slide. This is the third slide. Means as per the presentation distance. This is the next slide. And this is the common gaps in the costing of the production order accounting. And these are the month-end closing steps. These are the production order accounting entries. And these are the benefits where we have highlighted the difference in COGM, COGS as change in stock. And we have shown the demo of that whole things. And this is the way forward. So this is what the total crux of the whole webinar. We just can summarize also here. Numbers. Fourth slide. So I have covered all the slide now. So is this okay, or you want me to specify any particular slide in this? Fourth slide. One, two, three, four. Yeah, in this slide, what you want? Okay, here what we have referring is, if you are following a production order accounting and if your processes are repetitive in nature, then rather than collecting the cost at the production order level and complexity will be high in the production order for your repetitive manufacturing process, then you can follow the process of product cost collector. Even though the production team is following the production order, you can collect your cost on the product cost collector. So this is something called dual approach. The production is happening in production order, but the costing is happening in product cost collector. So this is a dual approach scenario. And it is very, very helpful if the production is repetitive in nature and no batch concept is involved in that. Is it clear to you, Samir? Okay, thank you. And thanks a lot for joining. Thanks a lot. If you have any more questions, I'm here. Otherwise, we can close this. Thanks a lot for your time. Thank you.